Most of us will face financial challenges during our lives, like having a car you can't afford any longer. But what if you discover you still owe more money on the car than it's actually worth? This is commonly referred to in the auto business as an upside down car loan or being underwater. And the fact is, you're stuck with an auto loan with negative equity. Negative equity auto loans happen when a buyer takes out a loan with an attractive long term loan financing. But at some point, the loan balance surpasses the car's market value. So, how do you escape a negative equity car loan for a vehicle you no longer want? Hi, I'm Mike from Driveo, your solution to getting out from an upside down auto loan. What follows are some exit strategies you can use to get out from an upside down auto loan. But first, let's look at how to accurately determine if your car's loan is upside down in the first place. First, determine your vehicle's value using reputable online used car sites like Kelley Blue Book, Edmunds, or the Driveo method. The market value will vary if you choose search terms using vehicle trade-in versus private party sale. In addition, you'll also be asked to enter the following: make, model, and year, your zip code, interior and exterior colors, option packages and engine, upgrades, mileage, and condition. Next, contact a couple local dealerships and inquire about the trade-in value of your car. Compare the online trade-in value to what you would find at the dealerships, and those numbers should be close. Now it's time to find out your car's remaining loan amount, and all that takes is a phone call to your lender. Or you can multiply the number of remaining payments by the monthly amount. Let's say you want to trade in your car to a dealership. In that case, compare the average trade-in price from the various sources to what you still owe. If the loan amount is higher, your car has negative equity and your loan is upside down. Here's a tip. Do you have gap insurance or a service contract listed on your finance contract? The number one mistake many car sellers make is not canceling those products after selling their car. Most aftermarket products can be canceled for a prorated refund, which equals more cash in your pocket and less negative equity on your car. If the car you can no longer afford is worth more than the loan amount, one quick exit strategy is to sell it to a dealer or trade it in towards another car. In either scenario, the dealer pays off the existing auto loan's balance. Any leftover cash can then be rolled over as a down payment towards a less expensive model, or you can buy an older car without taking out another loan, or simply walk off with the cash if you have other modes of transportation available. If your car loan is upside down, consider options to get out from under it. Here's how. Sell or trade it to a dealer. If you really can't afford another car right now, you can sell yours outright to a dealer. They'll pay off most of the loan remainder, and then you'll need to come up with the difference in cash or by taking out a small personal loan, which will eliminate subsequent car payments. Refinance your existing car loan. This will only work if a lower rate or longer loan terms are available. Don't take out another loan where the finance terms exceed the car's value like before. Run the new loan's terms through an online loan calculator first to ensure it won't go upside down. Keep in mind, refinancing will serve as a short-term affordability solution, and only if you plan on hanging on to the car for quite some time. Private party sale. It's true that you'll probably get more money using this approach, but first, notify your lender of your intentions. See if the loan is transferable to another party. If not, you'll need to come up with the difference between the sale price and the loan payoff amount. Consider that it takes a private seller on average more than 60 days to sell a used car. Another option is just to hang on to your car and continue making payments until its value is above water again. But in the meantime, increased mileage could further depreciate its value. If your car gets totaled, you may get stuck with forking out the difference between the insurance check and the remaining loan balance. When your household debt and liabilities really pile up, you can find yourself trying to juggle payments to creditors every month. Filing for bankruptcy is one method to keep them at bay, but that can be messy. Allowing your lender to repossess your vehicle is also a possibility, but that's simply not a good approach. When you've reached a tipping point where you can't afford your car anymore, bring it to Driveo instead. We pay top dollar, which reduces the equity difference between the loan payoff and your car's value. As a result, there's no need for you to pay off the car first to sell it in full. Driveo can also handle stressful paperwork like canceling your gap insurance, service contracts, and other costly obligations that increase your loan's value. By doing so, we'll reduce your vehicle's negative equity loan balance and ensure you get maximum resale value, all while restoring your peace of mind. So when life's challenges have left you with an auto loan you can no longer afford, let the professionals at Driveo value your car and save you time and money along the way. Get your quote online in minutes. Just go to driveo.com.